We noticed that performance has varied quite widely across different geographies. While this is an international portfolio, meaning ex-US companies, the United States does have an impact on what's going on in the rest of the world's economies, and seeing strong growth and persistent inflation here in the US led to a hawkish Fed, which means that people are expecting fewer rate cuts, which then muted market returns. Looking outside the US, the dispersion of returns were influenced by a wide range of factors. There were elections in Mexico that put pressure on that stock market. Brazil was in a budget battle, which put pressure on that market. Japan continues to struggle with its currency headwinds, which kept a lid on growth in that area. However, on the bright side, India has had another strong quarter in light of all these other difficult areas. Volatility kind of cuts both ways, and it's a bit more pronounced as you move out on the risk spectrum, which would include small cap stocks. The price declines tend to be more dramatic on what people would quote unquote consider bad news. However, it usually leads larger businesses out during a market turnaround. And from a valuation perspective in our portfolio, we've noticed that U.S. small caps, judged by the Russell 2000, trade at about 90% premium to international small caps. The Russell 2000 is trading at about 27 times forward PE, whereas the international small caps, measured by the All Country World Index ex-US small caps, is trading about 14 times PE. Our fund specifically is at historic absolute lows. We're trading at about 20 times next 12-month PE ratio, which is the lowest valuation since 2015, and trading at about 1.6 times the benchmark's next 12-month PE. Yeah, upside themes in the latest quarter include some of our exposure to growth in defense, growing budgets, modernizations and restocking, artificial intelligence, strong CapEx support from hyperscalers impacting those companies, as well as travel, whether it was airlines or airplane companies. From a sector perspective, being underweight real estate and overweight to tech and financials helped. Sector and regional positioning has not changed too much. We're pretty consistent in the way we manage our exposures. The underlying names underneath will change over time, and we did see some turnover in those holdings. However, it may be worth noting that our Japanese exposure has been a continued headwind to short-term performance due to the ever-weakening yen. However, we expect this to eventually become a strong tailwind for the small cap universe in the international space. As I mentioned, we did have a very active quarter. We sold 13 stocks and bought 11. Some were valuation oriented, getting rid of businesses that maybe had reached their thesis, and some just added to the portfolio based on a better opportunity than maybe something we held. As an example of something we bought in the quarter, we bought Australia-listed Life360. This is a list subscription business focused on family solutions, emergency assistance, and a variety of notifications. This business is effectively a way to stay in touch with family members. When my kids go driving from home to school or anywhere they're going, I can keep tabs on where they are, the speed with which they drive, and even if they use their phone to text. The company has pricing power through new features, as well as significant advertising opportunities, and they have an innovative culture that is always trying to anticipate customer needs.